Everyone, thanks so much for being here. Super excited about this discussion. It's super relevant, navigating the fintech investment landscape. Actually, it's very relevant for me personally as well, because we just announced the first closing of our second fund, investing across Canada and US. Thank you. Thank you so much. So without further ado, I'd love to start with introductions. Devon, do you want to go first?
Sure. Hi, I'm Devon Kirk. I'm a partner at Portage. Portage is a global investment firm that focuses exclusively on the fintech and financial services space. I co-head the later stage strategy called Portage Capital Solutions.
Perfect. Nayla?
Bonjour tout le monde, Nayla Chebli, je suis directrice investissement en capital de risque et en capital de croissance à la Caisse de dépôt et placement du Québec. Alors on investit dans des sociétés plus matures, donc des entreprises qui sont rendues série C et plus. Pour nous, ça veut dire à peu près 10 millions de chiffre d'affaires. Et puis, bon, notre taille de transaction typique, on va dire pour un premier investissement en capital de risque, va être aux alentours de 25 à 35 millions. Puis le capital de croissance, pour nous, c'est du 50 à 150 millions de taille de transaction. Voilà.
Perfect.
Laviva, I need to start by congratulating you.
Thank you.
Not some news for the ecosystem. You're the star on the panel today.
Yeah. That's too kind.
So I'm No from RBCx. I'm managing director for Eastern Canada. So it's a platform we created 3 years ago. So it's a banking platform, VC platform, consulting platform, plus a studio of ventures. So our mission is very simple. It's like we help companies, innovative companies in tech, fintech, clean tech, life science, scale faster. So I'm part of the banking team. So what we do, we provide solution, non-capital solution and capital solution. So you can think of lending like venture debt, MR line to our innovative clients. And we open doors for them internally and externally. And we have, like, we are across the country from St. John's to Victoria. We have more than 4,000 clients. And we have the capital team. So banking team, we are more than 100. The capital team is smaller. They have two missions. They take care of the relationship of the VC firms or clients. We have VC clients. And we invest in their funds and also do direct investment. And the consulting platform, these are our operational experts in product design, technology, marketing. So they support our ventures, but they also advise our clients. And finally, our studio of ventures. So these are strategic investment, part of RBCx. So we have 4 ventures: Ojo, Canada, Dr. Bill, Honor, and Maido. They are scale-up, and they are, like, aligned with our business line of businesses, and they generate users that can become eventually new clients for the bank. Yeah. Sorry, it was a little bit long, but...
No, that makes a lot of sense. Thanks for setting the context.
Yeah, and it's a pretty unique vision and pretty unique position, even in the world. So very proud to be part of the team.
Awesome. And last but not the least, David.
Good afternoon. Hi, I'm David Schwartz, Chief Financial Officer at Nuvei Corporation. We are a fintech. We operate on the payment side and the ecosystem around payments. The company was founded, we're celebrating our 20-year anniversary this year, so founded 20 years ago. Our niche would be e-commerce payments, high volume e-commerce payments. We operate globally in all four regions around the world. Differentiated through the way we offer our product, a la carte from a technology perspective, and the breadth and scope of our offering, which is really, we can access about 200 markets and offer over, if you can believe this, over 630 different payment methods around the world. So we're a global business, and happy to be here. Thank you.
Awesome. Before we get into the discussion, I should just mention that the discussion will be in both English and French. The content is also available in English and French to everybody. So yeah. All right. So first question is to each of you all, just to kind of set the stage, is how does fintech fit into your overall investment strategy? And what stage of fintech companies do you typically invest in? So again, maybe we'll start with you, Devon.
Sure. So obviously, fintech is very central and core to our strategy. We think it's a sector that really benefits from having investors with deep expertise and tailored resources and ecosystem to support them as they grow. You know, from a stage perspective, we have two key strategies today. One is our venture strategy, which starts as early as seed and goes all the way up to B. And then we have my strategy, which is really looking for slightly more mature businesses, anywhere from growth stage to even later.
And across globally?
So venture is a global strategy. For my strategy, we're more focused on North America and Europe, with a majority of the later stage investments in the US, but keen to find as many opportunities in Canada as possible.
Awesome. Nayla?
Oui, bien sûr, avec plaisir. Donc, parler un peu de la façon dont on pense à nos investissements en technologie à la Caisse et donc dans le monde des fintech également. On pense vraiment à ça sous l'angle en fait d'un continuum d'investissement. Donc, on a essentiellement une équipe, et là, je parle plus que juste l'équipe pour laquelle je travaille, je parle vraiment de notre vision, en fait, c'est de bâtir ce continuum où on commence vraiment avec l'équipe. On a une équipe de fonds dédiés qui investit, en fait, dans des partenaires, des fonds partenaires, d'ailleurs, Luge Capital et Portage Venture sont des partenaires pour couvrir, en fait, le début de la chaîne. Donc, vraiment, tout ce qui est seed, série A, série B, ils font aussi du later stage. Notre équipe, donc mon équipe, en fait, d'investissement va vraiment investir en direct dans tout ce qui est série C, entreprise plus en phase de croissance et d'accélération. Et on a aussi une équipe en fait dédiée dans les marchés publics qui vont investir dans tout ce qui est des entreprises qui sont en phase pre-IPO, donc qui ont une visibilité de 12 à 18 mois pour éventuellement devenir publiques. Ils investissent aussi au moment de l'IPO et en fait détiennent des positions encore aujourd'hui des positions publiques dans des sociétés fintech, dont Nuvei justement. Alors vous avez vraiment un bel exemple en fait de ce continuum d'investissement. Pour nous, c'est vraiment une stratégie qu'on veut supporter aux différents stades de croissance, avoir vraiment cette approche en fait de capital à long terme qui réinvestisse au bon moment dans les différentes phases et cycles de croissance d'une entreprise.
So multi-stage strategy, but you specifically focus on that growth stage, Series C and onwards.
Exactement, tout à fait.
And
Yeah, so we have like three pieces in our investment strategy. So the first one is direct investment, the second one is acquisition, and the third one is fund investments. So on the direct investment side, so we are like stage agnostic, so we can invest in seed, Series A and up. We have most of our investment up to date have been like more Series A and B then. And I can give you two good examples. So Conquest Planning was one of our investments. Boosted AI, another one. Yeah. Maybe I feel like we are like a little bit, we are having a cozy chat there. So I can maybe give you a little bit of another insight. So we are like very active in looking at whole platform. They are specialized in digitalization of our operations. That's very critical right now for us.
At the bank.
Yeah, so if you have any solutions on that specific area, I really encourage you to come to see me or my team, and we would love to like hear about these type of solutions. So that's a direct investment. The acquisition we did earlier this year, we did an investment in Ojo, Canada. So it's like a real estate fintech. And on the fund investment side, so we make active effort on the leading Canadian managers who are ever generalist in tech investment, but also focused in fintech. We have more an holistic approach. It's more strategic approach. We don't want just to be part of the cap table as a single investor. So it's very important for us to see what could be the benefit for other line of businesses within the bank. So that's the way we see our fund investment.
makes sense. David?
So all we do is fintechs. Obviously, it's an important part of our strategy from an investment perspective. I'd categorize it into three buckets. I'd say the first is we invest in ourselves. Back in the business, we see a tremendous amount of growth opportunity still with Nuvei, despite the fact that we're, in multiple regions, there's a lot of opportunity. So investing back in our business is the priority. The second category would be around, call it minority investments. We have done those to some degree in the past. That would be the exception, not the rule. Typically, there would be some kind of strategic relationship or something of interest that we'd want to have a seat at a table with a specific industry or company. So certainly that. And then the third, which is kind of the one that's most active and maybe most relevant for this discussion, is around just 100% acquisition of various companies. And in terms of the stage of those companies, typically they will have a proven, not typically, they will always have a proven business model, revenue stream, customer base, technology, and then it ranges from there. So we have done some transactions that have been, for us, quite large and transformational. We've acquired 2 public companies in the past almost 5 years. Out of our, call it 11 acquisitions we've done in the last 5 years, 2 of them have been public companies. So maybe more progressed, I don't want to use the word mature, but more progressed businesses.
Got it. Since we're speaking of criteria, is there anything else that you look for in terms of criteria when investing or acquiring companies?
So for us, what we look for, I guess there's kind of like 2 levels of criteria. So the first threshold that we'd look at is we will do an acquisition primarily either because it enhances us from a geographic perspective, so either gets us into a market that we're not in already, or it gets us deeper and more entrenched in a market that we're interested in. So that'd be the first. The second would be around capabilities. So again, it either would add to our capabilities, giving us more kind of depth in a certain capability that we have already, or it brings us a brand new capability into our solution set. And then the third would be around scale. Typically, we wouldn't do a transaction just for scale. It typically would come with either geographic expansion or capability expansion, but scale is also an important factor to it. So that's kind of like the overarching criteria we look at first. And then, as you can understand, the next level is just around, what's the business model, what's the revenue, what's the profitability, what's the cash generation, talent, culture, that next level that you'd expect typically in that kind of investment thesis.
Got it. And on the earlier stage, I guess, compared to where David sits, would be the 2 of you, and also Anne. How about yourselves? What kind of criteria do you look for?
So starting with Portage, we have over 80 portfolio companies in the sector. It spans B2B and B2C, more tech-driven versus more financial services-oriented business models. So there is a real breadth there. I would say for the later stage strategy, we're certainly looking for businesses that have large TAM and differentiation, like all of us are. I would say we're also focused on businesses that have very much proven product market fit, multiple customers, high revenue retention. Unit economics, I think everyone knows, are much more in focus than they have been in recent years. So that's certainly a priority for us. And I would say, equally important is, having a real characteristics of resilience around the business. And so, whether that's from a strong technology moat, recurring cash flow, other characteristics that really give us conviction that this is a durable business model.
Yep.
And of course, growth is always something we're going to focus on. But I do think that in our later stage strategy, we've got more flexible capital and also a recognition that in this sector in particular, it can take time to grow fantastic businesses. And so we really look at sort of the total picture.
Got it. Nayla, anything to add?
Oui, bien sûr. Alors, beaucoup de similitudes avec ce que Devon vient de dire, effectivement. C'est sûr que pour nous, la croissance est importante, mais on parle aussi d'une croissance saine. Et ça a été le cas aussi même avant la pandémie, donc même un peu avant la bulle qu'on a pu connaître. On a toujours eu une discipline un peu dans cette approche, dans le sens que on parle d'une croissance minimum idéale aux alentours de 30% de croissance et plus, mais qui vient aussi avec une unit economic qui est justement raisonnable quand ça vient justement à la gestion des cash flows, surtout plus récemment, mais aussi historiquement. C'est important pour nous aussi qu'une compagnie brûle de façon raisonnable. On aime aussi, on s'entend encore une fois, on est plus later stage, donc on rentre en fait dans des entreprises qui ont démontré leur capacité à vendre, et l'objectif est vraiment d'alimenter la croissance et de continuer à investir pour accélérer la fonction de go-to-market.
Mm-hmm. And Anne?
Yeah, so maybe I can add, and that's pretty the same criteria, but when we do investment, then we look at also, we want to be close to the emerging trends. And we want to be close to the players in the space, right? So we look at that too. Funny fact, then we're in the middle of probably the most major acquisition we have done at the bank. It's the acquisition of HSBC Canada. So we have like a big spectrum of acquisition, right?
Yeah.
Yeah.
Awesome. So Nayla, we know that, I think everybody knows that global funding, including in fintech, has been going through a bit of a roller coaster. Obviously, we know the latest numbers are that this year funding has been pretty low. What's your take on the current situation, but also do you have a point of view on when funding market might bounce back?
Oui, effectivement, je pense que tout le monde est au courant qu'avec la hausse de l'inflation, la hausse des taux d'intérêt, en fait, la dépréciation des valeurs des entreprises technologiques et fintech, le marché IPO qui avait fermé, il n'y avait pas énormément de possibilités de sortie. Donc, de façon générale, tout ce qui était funding, volume deal avait été à la baisse, autant dans le secteur technologique que dans le monde des fintech aussi. Je pense qu'on commence à voir certaines indications justement que le marché est en train de réouvrir, qui sont quand même assez intéressantes. Donc, on voit une certaine stabilisation, une pause du moins de la hausse des taux d'intérêt qui vient un peu stabiliser l'ensemble des valorisations. On voit aussi le marché IPO, donc on parler des IPO récents qui ont eu lieu, on peut penser à ARM, on peut penser à Instacart, puis Klaviyo, tout le monde a suivi. Bon, essentiellement, ARM et Instacart semblent se maintenir autour du prix IPO. Donc bon, c'est encore les premiers indicateurs, hein, c'est un peu tôt pour vraiment pouvoir le dire. Mais sur une base anecdotique, ce qu'on voit, nous, sur le terrain, c'est qu'essentiellement, il y a de plus en plus de deal flow. Je parle encore une fois later stage, qui commence à venir des États-Unis. Donc on voit que les États-Unis sont en train de repartir là-dessus. Des transactions qu'il faut travailler. Hein. Il y a toujours un peu cet enjeu, surtout plus later stage au niveau des valorisations et du gap de valorisation. Mais je pense qu'il y a de plus en plus d'opportunités à regarder justement récemment, en fait, vraiment plus depuis le retour en fait des mois d'été. Alors voilà, c'est un peu ma perspective.
Yeah, and I would agree as well that I think a lot of the funding metrics are going back to pre-COVID levels, but we forget that those were already pretty good, valuation multiples and whatnot. So I think 2021 was a bit of an anomaly in my point of view. So yeah.
Ouais, tout à fait d'accord.
Devon, so in terms of being a late stage investor yourself, are you seeing in this market any unique deal structuring opportunities? Are you coming across unique ways of making a transaction happen?
Yeah, absolutely. I've always been a really big believer in tailoring capital for the needs of a particular company as opposed to sort of cookie cutter solutions. And I think that's important in all types of markets. But certainly in this market where you've seen a big change in valuation levels, it does create sensitivity around dilution and more, I think, need for people to really think about, how do we find the right capital for this situation? I think that can take a variety of different forms, but one thing that we're seeing more of really over the last few months is more creative approaches to doing unpriced rounds. So, I would say early in this cycle, we were seeing more sort of safe notes and sort of plain vanilla unpriced rounds. I think people have gotten a little bit more sophisticated on ways to do that are more interesting if you're going out to an audience beyond your existing investors.
And can you expand on that a little bit? I'm actually just curious. So above and beyond safes, so using other instruments that behave similar to safes, or?
Yeah, exactly. So things like warrants or having structures that have, both caps and floors associated with them. I think a range of tools for sure.
Got it. And maybe I'll just add, I don't know if you're seeing this in late stage, but founders, a lot of the times they will fixate on a valuation, but they don't necessarily always realize that there are other ways to structure a deal where they might, the economics can also change. So liquidation pref being one of them, for example. So, yeah. So David, Nuvei has obviously made, as you said, a series of acquisitions. I think the most recent one that was publicly announced was the $1.3 billion acquisition of Paya. In terms of, when you're looking at an acquisition, what kind of opportunities are you looking at, and what type of businesses do you look to acquire?
We have a dedicated M&A team. Deal flow has been good because we've been acquisitive, so we're known to be of interest as a potential acquirer of businesses. Deal flow, despite, we're talking about valuations, deal flow has I'd say, being maintained in general for our team. We're seeing a bit of a dichotomy in terms of what we're seeing on the deal flow side, where you see, and it was mentioned a bit by the panel already, you see some businesses where they're still kind of looking back at what valuations were a year or two ago. They don't need capital, so they're kind of have that peg on. So that's one set of that's one group. Then the other group who needs capital, typically that's of less interest to us. So what we're seeing from a deal flow perspective, there's good deal flow. The quality isn't always the same, right, when you think about some of those factors. So for us, what I mentioned before, it's around, we look for, how can we expand geographically our capabilities and then scale. But we don't typically like to enter a process. We like to be very strategic and targeted of who we'd like to acquire, industry and business. So our team spends a lot of time there. They're not just the M&A team, but they also help us with strategy. And so they spend a lot of time understanding who the players are, who's out there, and then kind of moving forward to identify and enter a discussion and kind of move forward on that basis.
Got it. Anne, in terms of RBC's fintech startup clients, how are you advising and supporting them in navigating the current market? And do you have any advice for founders in this room in terms of how they can navigate this market?
Yeah. On voit la tendance, puis c'est pas juste pour nos clients, c'est d'être sur cette voie de profitabilité. Donc, comment on les aide avec cet environnement qui est challengeant? Premièrement, on les aide à couper les coûts. Donc, on revoit leur modèle d'affaires et on regarde comment on peut leur donner les meilleurs conseils au niveau du pricing de notre côté en utilisant nos produits. Et aussi à streamline et optimiser leur process. On regarde aussi beaucoup sont aussi concernés sur les talents. Donc, on a des solutions pour les aider à retenir leurs talents. Donc, ça, on travaille beaucoup avec eux. J'ai quelqu'un dans mon équipe que je suis allée chercher il y a à peu près 1 an et demi, spécialiste en produits de FinTech. Et puis, donc lui, il regarde les modèles d'affaires de nos clients et leur donne des conseils concernant les produits. On s'occupe aussi de leur ouvrir des portes parce qu'ils veulent signer des nouveaux clients. Donc, j'ai eu la chance de rencontrer récemment, cette semaine, une FinTech. Et puis, elle voulait rencontrer notre équipe de Wealth Management, gestion de patrimoine. Donc, notre CEO de Wealth Management Canada vient la semaine prochaine. C'est facile pour moi de trouver 15 minutes, 30 minutes dans son agenda et de mettre cette FinTech devant lui. Fait que toutes ces introductions-là sont précieuses et c'est notre mandat de faire ça. Même chose pour des clients potentiels. Puis je dirais la dernière chose aussi, c'est au niveau personnel, on prend soin d'eux parce qu'ils sont très, très focusés sur leur business, mais on s'occupe de leurs affaires personnelles aussi. Fait que, ouais, des fois, j'ai l'impression que we are like a kind of psychologue for them too. So, yeah.
That's incredibly valuable, the kind of access to the CEO of wealth management within a bank. I mean, I think that's one of the main things that a lot of fintech startups serving financial institutions, that's the kind of value that they're looking for. So
I feel I will have like a list of people coming to meet me for CEO Wealth Management after the panel.
You'll be cornered after this panel. So back to you, Nayla. Actually, one of the things that, Anne, you were mentioning is around business model, advising startups about business models and pricing. And I think that's one of the things that has really been brought to light in this market. And I think especially for fintechs, because as Devon, you were saying, there's a lot of startups that are tech-enabled financial services as well. But then you've, the other side of the spectrum, pure SaaS businesses and so on. So my question to you, Nayla, is when funding picks up again, which it will, we know that, do you think investors will shift the way that they evaluate fintech startups? And, what are your thoughts on, valuation multiples? That's, I know, something that a lot of founders are curious about.
Oui, bien sûr, je pense que c'est une très bonne question. Je pense qu'il y a un peu un retour du pendule. Ce n'est pas nécessairement qu'on va réinventer la roue ou que les choses vont changer. Effectivement, dans le monde de la FinTech, on sait que ça a toujours été aussi une évaluation en fonction des différents revenue streams. Donc, est-ce qu'on parle d'un revenu de paiement, un revenu récurrent? Tout ça va rentrer en jeu un peu dans la façon dont une FinTech va être évaluée. Mais je pense, pour revenir un peu plus à la question spécifique autour des multiples en fait, d'évaluation, puis on parle souvent de multiples en fait, justement de revenus, ce qu'on peut voir si on regarde, et encore une fois, moi je parle spécifiquement pour le later stage VC, pour les entreprises aussi, un de nos benchmarks va être essentiellement les entreprises publiques, parce que bon, on investit dans les entreprises aujourd'hui avec la perspective que 24 à 36 mois, une des sorties potentielles, ce serait justement un IPO. Quand on regarde en fait des sociétés publiques, surtout dans le domaine SaaS, juste pour donner un peu une indication en fait de comment il y a eu une bonne variation, on sait que en fait les multiples ont eu un pic en moyenne aux alentours de 15 fois dans les 2 dernières années. En ce moment, on se transige plus à du 5-6 fois les revenus des 12 prochains mois. Et si on regarde justement la moyenne 6 ans, même avant la pandémie, on convergeait plus vers un 6-7 fois les revenus. Donc essentiellement, on voit cette tendance qui revient. Donc c'est un peu ce concept de revenir, du retour du pendule. Je pense d'autres éléments importants aussi dont on entend énormément parler, c'est la fameuse règle de 40%, donc Rule of 40, qui même dans certains cas, on parle même d'une Rule of 60. Et donc pour ceux qui sont familiers, j'imagine pour la plupart de l'audience, les gens sont familiers, c'est vraiment ce concept de combiner et la croissance dans le modèle d'affaires et un certain niveau de profitabilité. Donc, quand on met le niveau de croissance avec la marge bénéficiaire, on veut s'assurer d'avoir un minimum de 40%. Et les tops, en fait, best of class, vont être dans la règle de 60% essentiellement. Donc, très forte croissance ou une croissance raisonnable combinée avec une marge bénéficiaire positive. Voilà.
Great. Devon, anything to add to that? And maybe you can also shine some light on the earlier stage of it? In terms of what fintech investors are looking for in terms of valuation multiples, and is there a change in the way that they will be evaluating fintech startups?
So, I actually really agree. I don't think anyone's rewriting the book in terms of how to do this. I think what we've seen in the fintech sector in particular is that there were, frankly, a lot of generalists that came into the sector and may not have necessarily applied the right, valuation frameworks or fully understood the risks inherent in some business models. So I think we've seen a lot of that capital pull out of the sector, and maybe rightly so. But I think for folks that know the space well, there's a little bit of that froth that's come out of the market for sure. But I think good businesses are continuing to get capital raises done in this environment at all stages.
Yeah, I would agree with that. Do you have any advice for early stage founders on how they can become more ready for late stage investments?
Sure. I mean, I think the things to think about are building for scale, right? So we do see a lot of B2B businesses that have built products that need to be heavily customized, are hard to implement. I think that gets to be a challenge as you get to growth stage. I think, on the B2C side, we sometimes see folks who've built products that are, going after quite a niche market. And so really thinking about, how you build for scale over that longer time horizon is important. We've already talked about unit economics at length, certainly important as you get to that growth stage. People will be focused on that. Maybe the last thing I would say is really around making sure that you build proof points for anything you're looking for your investors to back. And so a common scenario might be that somebody's gotten some traction on part of their business, and they are really looking to raise capital around doing something incremental, maybe a new product, new geography, et cetera. And that can be a bit tricky because at the growth stage, we're really looking to invest in more than an idea, right? We're looking for proof points around where our capital is going to go and why that's going to generate an attractive ROI. And so really thinking about, obviously you're not going to fully build it out. You need the capital to do that, but how do you de-risk it, I think is important for those types of capital raises.
Great. Anne, I know we talked about this before this panel, but do you expect that the due diligence processes will kind of change, as we start to come out of this market, investment rounds pick up again, and if so, how should founders be preparing for that?
Yeah. So what we see is, and first, the technical part of the due diligence is the same for us. So what we see then is the process is slower, right? And why? Because we are taking our time to invest. we want to make sure we have the gems in our hands, right? So what we do then more, it's like when we have an investment in front of a potential investment, we will do more comparison with other potential investments to make sure that this is the best investment we will back. So that's the first thing. And in terms of advice for the founders to be well prepared for the due diligence, make sure you have like a very fortified data room. I mean, you need to like have contents very transparent, very clear. You need to be, I mean, you know, it's kind of funny parallel, but dressing sharp for a date, right? It's great. So that's the same thing with the investor, right? So make sure you have like you show up as your best, and you have. I think it's oversharing. It's better. So that's the advice, and yeah, you will have multiple touch points with the investors, back and forth. So what I see on our side is like, let's say, we probably go to our expert more often, and we have this type of back and forth. So that's why it's lower the process, and yeah, be patient because we are in a no rush right now. So.
Yeah, deal pacing has slowed and diligence has gotten longer. I agree. And I always recommend to founders, before you even start raising, have your data room ready to the extent possible, because if a conversation goes really well, that request for data room might come pretty quickly. So you want to make sure that you have your house in order to do that. So
yeah, and the back and forth, actually, it's good. It's because we have interest, right? So.
Yeah, exactly. And the other thing is I hate discovering skeletons in the closet once you start digging into the data room. If there's something that, you know, should be mentioned, these are very long-term relationships between investors and founders, so it's better to just be forthcoming about that, to build off of your point.
And I agree. I mean, it's more like a relationship process than a transactional process.
Yeah, definitely. It's a big aspect to it. David, so in terms of, you know, your acquisition strategy at Nuvei, does Nuvei prefer to partner with businesses before acquiring them? And if so, then how should founders be thinking about setting up these partnerships with strategics?
Yeah, it's an excellent question. For the most part, we haven't necessarily had a relationship with a target before. We have on occasion. I'd say that's really, again, the exception, not the rule. And when I think back to those instances where we did have a relationship, a pre-existing relationship, in most of the cases, it probably was not by design. It wasn't with an intention of then doing an acquisition thereafter. It was just, you know, made sense to have that business relationship. So in most cases, there is no pre-existing relationship. We obviously have a good sense for the market. We know who the players are. What will happen, and to some degree doesn't fully replace, but replaces that pre-existing relationship, is just a really intensive diligence. And so we go through a very extensive diligence process, as you can imagine. It certainly ranges based on the type of company. We may bring in experts as well to help us, but we'll go through a pretty significant diligence process to make sure that it's a good fit for us in many ways. What I would advise, I guess, for founders is not to necessarily build your business for an acquisition to be taken out. Certainly you have to build your business to make sure you have the right capital and funding in place. I think that's certainly important. But if you build your business with a specific niche, if you build your business, talk about rule of 40, but if you build your business with revenue growth potential, scalability, as Devon mentioned, profitability, cash generation, opportunities are going to come knocking from strategics or otherwise. So I think that's how I would kind of advise a founder. Just think about the niche and what you kind of started, and just build it to grow a sustainable. I think that's the key, a sustainable business.
Agreed. I'd say maybe when it comes to banks and insurance companies, what I've noticed in that particular segment is that they do actually end up partnering before acquiring. So that's a little bit different from, I think, Nuvei's model, Nuvei being more of a fintech company, large corporation. So that's an interesting contrast for sure. So last question before Q&A from the audience is, what areas in fintech are exciting you these days? I'll start with you, Devon.
Sure. So we're really spending time across the sector, but maybe particularly in insurtech and bank tech and payments. We just announced an investment into a business called ThedaRay, which is really at the nexus of payments and reg tech, bank tech. And so that's one we're really excited about. Obviously AI is an area that I think everyone is spending some time around and certainly relevant for this sector as well.
And by bank tech, do you mean businesses that are enabling banks or helping them with their operations?
Exactly, yeah. It's technology being sold into banks.
Got it. And within insurtech, is it more of the same, focus on enabling insurers or going after them?
I would say there is a mix within insurtech of business models that we're spending time on. I would say we've seen a bit of a shift within the insurtech landscape where there were a lot of businesses that were running more kind of asset-light models, maybe digital distribution. I think a lot of those models have struggled to get to profitability. And so we're seeing a lot of more kind of hybrid business models, MGAs, for example, and folks that are selling software into insurance companies that are interesting.
Great. Nayla?
De notre côté, en fait, ce qui nous a plu historiquement et un peu ce sur lequel on se concentre, on aime beaucoup en fait la combinaison d'entreprises logicielles SaaS combinées avec une couche de paiement additionnelle. On est d'ailleurs investisseur dans Lightspeed, entre autres. Aussi, un autre space qu'on aime bien, effectivement, dans le domaine de l'assurance, donc Embedded Insurance. On est aussi investisseur dans Hopper, donc c'est aussi un secteur qu'on aime bien regarder, continuer à regarder l'œil dessus. Le paiement, de façon générale, je pense tout ce qui est neobank, il y a énormément de choses qui se passent, d'activités. Les valorisations sont un peu dépréciées, mais bon, un peu plus prudent autour du risque crédit consommateur. Donc, voilà.
Great. Anne?
Yeah, we are spending time on wealth management.
Yeah.
Data management, payments, and also generative AI, for sure. It's a hot topic for us.
Makes sense. David?
So we like payments too.
Yeah. Surprise.
Surprise. You mentioned earlier an acquisition that we did recently at the beginning of earlier this year called Paya. Paya brought us capabilities we didn't have before, specifically around B2B and integrated payments. So for us, those are two areas that we're really interested in expanding. Paya was really just a US-based business, so we can take the applications, the capabilities, and bring it outside. So that's certainly of interest to us. AI is interesting, both internally, how we can use AI to make ourselves more efficient internally, but also how we can serve customers better. And one thing we're seeing is using AI in our business and payments. The authorization rate is really important to make sure that our customers maximize their revenue potential. That's kind of how we kind of run our business. And using AI to improve auth rates is interesting. So that's something that we're working on. Emerging markets. So 95% roughly of our revenue is US, call it North America and Europe. But Latin America and Asia Pacific are very interesting markets for us as well. So that's exciting. And then some of the things that were already mentioned, open banking is interesting. Card issuing is interesting. So we have a lot that we're looking at and prioritizing.
Awesome. So it's all across the board, really, within financial services. Awesome. So any questions from the audience? No questions? All right. Well, I will continue my questions. That's more questions for me. That's great. What triggers an acquisition, David? And Anne as well for more kind of that strategic point of view when it comes to startups and just acquisition targets?
So I told you we look at, and you're right, we look at partnering first and do the acquisition after if it makes sense to us. But digitalization is very a big focus for us.
Got it.
Yeah. So we have right now this big acquisition with HSBC, for us, it's like the next 10 years of growth with this acquisition. So we are very focused on that. It's like, kind of an elephant in the room right now for us. So hopefully, at the beginning of 2024, it will be finalized, closed. So we have 2 big steps to do before that. So that's how we see acquisition right now, but very focused on this big one.
Yeah, got it.
For us, I talked about the high-level criteria, geography, capabilities, and scale, but for us, what we look for specifically, which is of interest, is how can we accelerate that business? So it's not just about, of course, the cost synergies, but the revenue synergies. And we have a pretty well-defined playbook where we're looking at opportunities that will, whether it's taking that business outside of their local region, whether it's adding those capabilities to ours, it's about how do we take that and really supercharge the growth, supercharge the profitability, and really enable their customers to be more than what they are today. That's kind of our concept and our philosophy around how we run our business and how we look at M&A. It's how do we supercharge that business at the same time helping our business and helping the ultimate customer. That's kind of how we look at things.
Makes sense. Just checking in the room if there's any questions. We still have 1.5 minutes. All right, I'll continue. Sorry, give me 1 second. So in terms of, I know, Nayla, you talked a little bit about, the IPO market potentially coming back and rejuvenating. So do you think that with ARM and Instacart's IPOs, for example, do you both think that we could be on the rise when it comes to more IPOs in the foreseeable future, or is the market still lukewarm for that?
Je pense que le marché est encore un peu volatile, sans dire que je pense que les IPO ont réussi, mais c'est des IPO qui étaient, je pense, extrêmement préparés. On se rappelle que certains d'entre eux ont quand même pris une bonne réduction de valorisation pour se rendre où est-ce qu'ils sont. On pense notamment à Instacart qui, je pense à son pic, qui était à 39 milliards et qui finalement exit, ou bien qui a IPO à 10 milliards, donc on parle de 75% de décote. Alors, il y a quand même eu un peu d'architecte, un peu de travail, beaucoup de travail en fait des banquiers pour accompagner et s'assurer que cet investissement, cet IPO tienne la route. Donc, sans parler d'IPO artificiel, je pense qu'il est un peu tôt pour sauter aux conclusions de se dire c'est un succès et puis le marché est prêt à reprendre. Je pense que les signes sont encourageants, effectivement, donc on garde quand même un aspect positif, mais il faudra voir. Je pense un qui semble bien performer pour l'instant, c'est Laviva, effectivement, qui a démontré une belle croissance, puis lui continue sur sa tendance ascendante, en fait, sur le prix en fait, la montée du prix. Donc, ce serait un peu ma perspective là-dessus, mais je pense que le time is going to tell.
Devon, anything to add? Oh, yes, please go ahead.
Yeah, I agree. I mean, there's no doubt bankers are being kept busy this fall briefing boards on the potential for a spring 2024 IPO. I think, fortunately, everyone's sort of lost their innocence over the last year or so around kind of, hope for the best but plan for the worst. And so I think companies are, if they're at a stage where they're ready to IPO, they're preparing for that possibility, but being circumspect about it as well.
Makes a lot of sense. Well, thank you very much for listening in. Thank you very much for sharing your amazing insights. And that's it.
Thank you.